Welcome to the Brainstorm, episode 112. Today we're talking Bitcoin. And what if I told you the biggest threat to Bitcoin is not regulation, but math itself? Raye, Nick Carter wrote a piece on quantum and the risks to Bitcoin. Can you break down what's at stake?
Yeah. So, Bitcoin in quantum, that's been a pretty topical conversation lately. And this piece was probably like one of the most comprehensive articles out there covering like the broader ecosystem and how quantum affects it. And so, to answer your question about specifically what's at risk, if we look at the Bitcoin network today, there's around a third of the total supply. So that's around 6.7 million tokens that are in wallets that are vulnerable to quantum computing today. 1.9 of these, I believe, are in older wallets. So these are wallets basically that use a key address that reveals your public key by default. And the risk of quantum computing here is that you can then reverse engineer the private key from the public key. So basically the ownership that Bitcoin promises for people can be circumvented in that case. And then the other 4.7 million coins, those are in reused addresses. And basically what that means is that these aren't as vulnerable, but once you make a transaction or when you send something from this wallet, your public key is revealed, and then they can reverse engineer your private key from your public key to then potentially steal your tokens. And so this is a big issue because, a third of the Bitcoin address is a huge, significant portion of the supply. And so it's pretty much an existential threat to the network. And then I would say the rest of the article just pretty much weighs like where the current state of quantum is today. And then it goes through a lot of the different scenarios of, what different actors, depending on who gets to quantum first, what they would potentially do in terms of how that would affect the Bitcoin network, and then potentially what the Bitcoin community needs to be thinking about today to get ahead of this issue, because it could potentially have huge ramifications for the entire crypto industry going forward.
All right.
Raye, let's talk about that and help us
Yeah.
understand what the Bitcoin community needs to do or what a potential solution is, because you went over it and it
Yeah.
will take some time. So maybe just help the viewers and listeners understand that.
Yeah, so there's a couple things because we want to kind of zoom out a little bit. The main risk isn't to the actual Bitcoin network in terms of the hashing algorithm or the consensus mechanism, so a lot of stuff that makes Bitcoin tick. The main risk is just in terms of the wallet security. So basically how you secure your private keys, which are essential to your ownership. And so what we need to do is then potentially move to a quantum resistant signature scheme. And there are a couple Bitcoin proposals out there, but one, historically, the Bitcoin community has been, not had the best record in terms of coming to quick consensus on new changes. So that's one issue in terms of the timeline for coming to consensus on what the Bitcoin community does. And then two, I'd say this is a bigger issue, is actually migrating a lot of the tokens that are vulnerable to quantum right now to quantum-proof addresses. Because if we think about one of Bitcoin's biggest problems, it's the fact that it's not as scalable as other blockchain-based network or blockchain networks. And I was listening to a podcast, Preston Pish does this, and he was basically just kind of estimating if everybody were to move $100 worth of Bitcoin to a new address, it could take 10 to 30 months. So if that tells you anything, one, you have the time, however long it takes to actually come to consensus on what to do. And then in terms of actually moving the Bitcoin, let's say it's not everybody sending $100, it's a third of that or a smaller portion, you're still looking at 6 months to a year of moving all the tokens to new addresses just based on the capacity of the network itself. So I would say, depending on what your timeline is for quantum, you probably need to be ahead of this by 2 years at least.
All right. So then let me quickly run through. He gives 10 reasons. And Nick Carter, he says this. He's not a physicist. He's not a mathematician.
Yeah.
But he is the one collecting this and, highlighting it. He's still bullish Bitcoin and kind of points. The analogy I'm making here is kind of to Y2K, which is here's a problem we're potentially going to face in the future. Let's not run from it. Let's acknowledge it and think about it in case we do need to cross that bridge. Brett, you're our resident mathematician / quantum skeptic. And so I want to get your response here to these. But essentially, governments are planning for a post-quantum world. So that's a piece of it. Qubit counts are scaling rapidly, and so there's been an uptick here. Investment in quantum firms is inflecting, and that's also true in the private space. There's several major quantum milestones achieved this year. Calling out Google Willow as one of them. A pulling forward of quantum firm breakthroughs. So this is what is this? Quantum firms project breaking ECC by 2028 to 2033. The number of qubits needed to break crypto systems is dropping. So that's the number of logical qubits relative to physical qubits is compressing. Bitcoin itself being just an epic bug bounty for quantum supremacy. I think you get a sense of where all of these are going. It's geopolitical, so it has high stakes with lots of national interests aligned. AI could accelerate the pace of quantum development, and credible people have revised their quantum timelines. And specifically calling out here Scott Aronson, who, wow, look at that face already. All right, that was number 10. Brett, what is your response to all of this?
Well, the thing I agree with most is that Bitcoin provides a potential bug bounty to drive the development of quantum computing. The issue, I think, with technologies, these out there technologies, these technologies that promise to be revolutionary, is that they can persist on this 15 to 20 year out time frame perpetually. So fusion famously has always been 20 to 30 years away. Quantum computing, even in the charts that Nick produces, you can see actually physical qubits aren't measured across the industry or measured at the best in class level, scaling in a way that would meaningfully pull forward timelines in a way that we need to be concerned about. I think early 2030s is the earliest that I'd expect Shor's algorithm to come under threat. And then so tracking back 2 or 3 years from that, it looks like 2030 is kind of Bitcoin's Y2K moment where everybody's like, oh my gosh, this is terrible. And then you upgrade the network and it's fine. And it's like quantum, like breaking cryptography would have all kinds of ramifications, much, much more meaningful than they will be against Bitcoin. Like even today, imagine somebody got all the coins with public addresses exposed, which would be a huge blunder by people. That would be, a third of the network suddenly is back into the float. And it would be a one-time third of the network back into the float. And then you'd still have effectively 21 million coins. It's just you'd have somebody getting rewarded obscenely for having broken that algorithm and collecting that third of the coin. So it doesn't change like the underlying logic of Bitcoin, the network. And it's pretty clear that a lot of that will be secured against quantum computing, I would say well ahead of kind of practical implementation windows of breaking cryptographic algorithms, because it's not as if this stuff is happening, on the sidelines. There's these public firms that are desperately trying to present themselves as being advanced in this stuff because they're raising expectations that are probably unrealistic about what quantum computing can do now, which it can't at all, in the hope of continuing to develop the technology so it's actually engineeringly scalable to do anything practically commercially useful. And that's I think the dangerous part for quantum computing is if you look at the timelines, they have slipped somewhat. And in order to get to this kind of like, manna from heaven land of stealing the Bitcoins that haven't been successfully transferred over to other addresses, you need to raise a lot of capital and create these bespoke machines and make them effectively manufacturing scalable in some way to build one that's big enough to do this work. And Sam, as you know, in battery land, for example, there's all kinds of, in battery land, you have things that are demonstrably better in the lab. You're like, this is a better battery. And lo and behold, actually creating it in a way that's commercially useful is really hard. In quantum computing, you have this is going to, at some point in the future, if we hit our timelines that we've been slipping on, going to be a demonstrably better thing at doing something useful, but not yet. And we're not totally sure when. And there's a lot of kind of not just engineering, but kind of scientific thresholds we need to cross over, even to get to the engineering stage of doing so. And so, could it happen in the early 2030s? Yes. I would take the over. I think it's actually not going to be a meaningful thing. I think you'll get to 2030 and it'll be like, well, this is a 2040s type thing. And I think it'll exist on that horizon for a while, in part because advances in AI are providing some of the capability that you would have wanted from quantum systems anyway, or good enough capability. And so some of the in-between potential commercialization milestones are not as commercially useful as they once were.
I think that's one of the more interesting points, right? Because it's like one of the points is AI can help with quantum development, but I think more realistically, it eats some of the early commercial applications that you would need to continue to raise money to develop it. And it's like, I think we all know from various technologies, money is a piece of the equation which can help draw the future forward. And so it's like you need to be, quote, the current thing to have that really continue to flow in that way. I do also want to just call out. I thought it was interesting. This was less tied into all of it, but an interesting comparison Nick made on AI and quantum, where it's like quantum, we know what it should be able to do. It's like we know the algorithm, we can't build the machine. And AI, it's like we have no idea what it can do, but we can build the machine. And it's like, okay, we know how to build the machine, and trillions of dollars are getting lined up to build that machine. Whereas quantum, you have a $600 billion bounty that could be extractable as this reward, but not as much money is being poured into it because we don't know how to build the machine.
But also, even building the AI machine, you get return on capital immediately right now, or at least commercially deploying AI systems. There was a paper out last week. It showed basically using AI to guide purchasing and customer support in e-commerce stores. I think it delivered a 15% sales uplift. I think it was low double-digit percent sales uplift just on like deploying an AI tool against existing workflows. Take a quantum computer and try to deploy it against anything and get any productivity advance. I challenge you to do so. There are API callable quantum computers from these, shady publicly traded quantum companies where they are begging you to use them to do anything useful. And I'm fairly certain nobody's doing anything useful with it. And so then that is just a recipe for being denied capital in the future.
I have one question for the group. Do we believe, maybe this is more for Brett, but do we believe that the frontier of quantum is happening at these commercial companies, or is it possible that there are some state-sponsored programs we don't know about? And is that part of the fear, uncertainty, and doubt here that we could have a quantum breakthrough, no one knows about it, and it's directly deployed against Bitcoin, and then, all hell breaks loose, for lack of a better term?
I mean, I suppose you can make up a story about China doing anything and people will be like, yeah, I think they're doing it. But the fact is, you have billions of dollars of capital in the Western markets where it's more transparent what's happening. And that capital is not yielding, the results that are likely to be meaningful. So, yeah, is there a history, like, can you all think of an example where kind of state-sponsored technological development led to something that was a real, immediate commercializable breakthrough? Like, I don't.
The internet.
But that there was like they laid the groundwork, but they didn't.
Yeah,
they
yeah.
didn't.
Yeah.
It didn't. It's not like a business got built out of it. And
The Manhattan Project.
Yeah.
Well,
Right. I mean, I
in
guess
the-
they developed basically commercializable nuclear power through
Right.
that.
Yeah.
But
Yeah. Well, in the article, it's interesting that you bring that up because Nick actually goes through like 4 different scenarios and talks about like how they would, none of them would be ideal for Bitcoin, but depending on like how they would affect Bitcoin, he kind of goes through like what you were talking about, Nick, like if state actors like North Korea or China were the first to get a hold of Bitcoin, I think he labeled North Korea as evil, like neutral evil, and then China would be chaotic evil. And the reasoning for why China would actually be worse is because of the US's and especially this administration's embrace of crypto and using it strategically, especially with stablecoins, to kind of, I guess, expand dollar hegemony. And attacking Bitcoin could undermine the entire industry. And there is a lot of incentive for like these big nation states that maybe don't have as much transparency to, obfuscate the potential or like the, progress that they've made. And then you can go and then attack like the Binance wallet or something and then completely undermine the entire industry in that case, or go for Satoshi's coins. So that's actually a big point of concern that he brought up.
I mean, I think imagine if you, instead of throwing however many billions are currently being thrown at quantum computing on an R&D budget per year, you did 10x that. Is there a reasonable case that that would meaningfully accelerate progress? I'm skeptical, but
Well,
maybe.
I think, there's a point where you could argue it's like a measure of national security on like China's part. Like if you're looking to become the global
Right, and I'm saying China has effectively unlimited budget. Like they can throw unlimited budget at this thing. Does that mean that they're going to solve it
I think
first?
we've got the general sense, but I want to. We want to thank Nick Carter for putting out this piece because I think he does so in a sensible way without necessarily scaring people, but a discussion to have. So Scott Aronson at the end, one of the people that he quoted, says, he started in quantum computing around 1998, and he's saying this past year or two is the first time he's felt like the race to build a scalable, fault-tolerant quantum computer is actually underway. He's now more optimistic than he's ever been that if things continue at the current rate, either there are useful fault-tolerant quantum computers in the next decade, or else something surprising happens to stop that. Brett, just quickly and concisely, what is your view / ARC's view on quantum computing? What is the metric that you're looking at that if you saw advancement there, you would say, okay, something real is happening?
Well, first, I mean, before you factor a 256-digit number, I'd hope to see at least a 3-digit number get factored with Shor's algorithm, which hasn't happened yet. Now, once you cross that, then you're in kind of like more engineering scale-up mode, is my understanding. And so then the pace of progress would be more predictable. And it may be, and call this a to-do list for me, it may be that the time between doing that first step and then getting to the next step would be sufficient time for everybody in Bitcoin land to be like, oh, this is real now. I think the I don't know. I have to like do more work to dispositively answer to you. Like this is the, or I should say, the metric that I need is not a metric that is readily available. People, and that's part of the problem with quantum computing. People say, this is the number of qubits we have. And that's physical qubits, which is distinct from logical qubits. Logical qubits is physical qubits that are then error corrected such that you can use them. And so you might need 100 physical qubits per logical qubit. You need some thousands of logical qubits in order to run Shor's algorithm. And but it's also logical qubits, they can only last for a certain amount of time before the error rates eat them alive. And so you actually need them to operate for a certain amount of time in order to usefully compute. And part of the problem with the industry is people are kind of like surfacing a variable that's upstream from the actual useful variable and say, look at the pace of progress we're making. But the pace of progress they're making often comes at the expense of some of the downstream things that affect how practically useful the computation is. And so particularly on the public market side, where companies are incentivized to show progress, even if it's actually not real progress, you can compute some more fundamental benchmarks like quantum volume and see actually the pace of progress relative to their physical qubit scaling is not as great as they're claiming. But it's a lot of work to construct, to basically DBS the metrics that are presented. And so I have not seen, even like the DARPA report that Nick, cites, it again cites physical qubits. Like, I haven't seen somebody cleanly put together, this is the actual pace of underlying progress here. And I've kind of back of the envelope here, and it looks like at least Google is just missing the milestones that they presented themselves as hitting. The industry is saying, well, these are the milestones we're going to hit in the future. Early 2030s is when this stuff will begin to be real. But they've missed by they've effectively, their timelines have doubled over the last 5 years in terms of what they've actually hit, as far as I can tell. So is it really a business cycle away, or is it 2 or 3?
All right, Nick.
I don't know.
Nick.
Okay, quick side quest. Raye, as a part of this quantum story with Bitcoin, there's been an interesting beneficiary in ZCash. You have some thoughts there. Why is ZCash running as it relates to quantum and Bitcoin?
Yeah, I mean, a lot of the general theory on this is that Zcash has something called shielded pools, and basically that's like the privacy preserving aspect of this, where if you put the tokens you have on Zcash into these pools, then basically it kind of obfuscates the ownership and nobody can tell who owns what. But the whole point of that is there's no public key reveal. So in this point, you're technically quantum proof if you have your tokens in these shielded pools. So that's one angle of why Zcash has, done really well in the last couple of months. Another, and this is kind of like my own personal conspiracy theory, if you want to call it that, has been that we've seen a lot of Bitcoin OGs selling recently, and as a method to evade taxation, which, these are very smart people with a lot of resources, you can go to an exchange, potentially, get your Bitcoin out of the wallet onto the exchange without doing any KYC, and then get it into Zcash and then slowly take it out. And by that point, nobody knows who the initial owner was, and you can avoid taxation. And obviously there's a lot of nuance that goes around that, but I think those are my two theories on why Zcash has been running, and then that's just adjacent to the general privacy narrative where you see, some potential overstepping in some large countries in terms of citizen rights and liberties, and people talk about the importance of privacy, and that's brought attention to Zcash also.
All right.
Yeah. The increase in Bitcoin voting accidents is leading to the increase in Zcash flows, is basically.
Yeah. All right, now time for the real meat and potatoes of the pertinent risks to Bitcoin.
Nick Groot versus Michael Saylor.
This one it feels very topical in that you have Michael Saylor, who's running MicroStrategy's, one of the largest DATs, if it is the largest DAT around Bitcoin. He just raised cash and built a USD reserve of upwards of $1.44 billion in order to pay out on his preferred shares. And it was the first time MicroStrategy has had to sell its own shares, thus diluting its shareholders to buy USD instead of what has normally been a Bitcoin purchase program. Raye, Brett, Sam, any thoughts here?
Well, my question is... go ahead.
Oh, well, I mean, I do think that a digital asset treasury company, probably MicroStrategy, being forced to delever is going to mark the end of this crypto bull market. Now, whether or not that's happening now, I mean, I think, Nick, as you say, it's just optics that he raised this and stuck it in US dollars as opposed to selling Bitcoin to raise the US dollars, I think. As in, this would otherwise have been sold shares to buy Bitcoin. And instead, it's sold shares to buy cash, which, on the metric that everybody prefers, which is Bitcoin per share, he, diluted the company. And MicroStrategy took on leverage where they have an obligation to pay out at a certain rate in US dollars, not in Bitcoin, being held underwater as you try to get out from under leverage is how all of these things, these cycles break, is there's a collection of people being held underwater, and they're like, well, if you just let me up for a gasp of breath, then I'll be fine. And the market knows that, and so just continues to hold them underwater as they slowly expire and
Well-
die. And until they like release kind of like the bubbles of Bitcoin back into the world, that can persist. So that's
I
I'd say-
100% agree. My question here is, okay, he's a very smart guy. He created the game. And so the question is he doing this because he sees what's about to happen and thinks it's like, does MicroStrategy be the lone survivor, or are they the main target in the one to take down? It's like, are they the first to go, or are they the last to go?
No, they would definitely be the last to go.
Right.
As
So
in,
then it's like-
there's because they're the biggest.
But are
right?
they?
And
They're the only player, or how many other DATs are offering these preferred dividend yielding shares? Because I think that is the real cause of worry for me, because Bitcoin as an asset yields nothing, 0%. Cash yields what, 3.5%, 4%, depending on where money market funds are sitting. And they're paying out anywhere from 7 to I think 10.5, 10.75%. Where does that yield come from? From my understanding, I've asked ChatGPT, I've asked Gemini, I've asked Raye, I've asked all of our crypto team. No one can give me a concrete answer of what asset they're holding that yields this 10.5%, other than, well, they'll continue to raise capital above MNAV, thus paying back their shareholders in the earlier products, and that's where the dividend yield comes from. To me, that's terrifying, because that relies on having to continually launch new products and raise new capital, which sure works in a bull market, but if your market environment change, risk happens very fast. Where does that capital come from?
Yeah, and I think that's like one of the main things that I've also been questioning, because like Sam was saying, he's obviously a very smart guy, but this strategy does seem like it relies on Bitcoin price to go up like in perpetuity for you to be able to continue the strategy. And like you were saying, I think they have around $700 million in annual obligations on the debt they already have. They're paying out yield on as well. So it's, when you're above MNAV, you can raise capital without diluting the Bitcoin per share. But when we're below MNAV, like you are today, and then you don't want to sell the Bitcoin because you're Michael Saylor, it kind of leaves you in this precarious situation, which, you know, I don't think there's a great answer.
Well, and maybe there is, and we'd love for people to tell us how we're wrong and misunderstanding this. But if you're going to point to, well, he's survived past market cycles, the one thing I would say is this is the first time we've had a full market cycle where he has been, quote unquote, levered up with preferred shares. This is the first time he's had debt obligations to pay out on. And I think that's really where the focal point should be, not in MicroStrategy, the share price, but in these preferred offerings that span a bunch of other tickers. And that to me is the cause for worry. It's not, in MicroStrategy and the DAT, the traditional DAT strategy. It's this added offering where you're creating yield from non-yield bearing assets.
yeah, but that's intrinsic to the debt. Like every market cycle, the market takes a scalp, and it doesn't take a small scalp; it takes a big scalp, and that's what hits the end of the cycle. And in the last cycle, you had 3 arrows that then trickled into kind of grayscale being held underwater. And, finally, even FTX stepped in to bail everybody out, and then they got killed. And that was the big scalp. And so I think it's fairly evident that barring some dramatic change, that the digital asset treasury companies are the marginal point of leverage here. Prior cycle, they weren't the marginal point of leverage, so they weren't the big scalp. But this is the big number that's hanging out there. And I think there's a question of there are very, very big dollars that are still kind of held offsides from the cryptocurrency space and that still should be flowing in slowly. I know everybody in Bitcoin land feels nervous right now. My own personal belief is that this is not yet the end of the cycle. They haven't taken on enough kind of debt obligations relative to their assets to be held underwater long enough that they can get, strangled and die. Instead, they're gonna muddle through, and then more liquidity will come into the system, and it'll resolve, and it'll be like, oh my gosh, everybody was wrong. These guys aren't the marginal thing that's going to kill the cycle. But instead, it's just going to like empower them and all of their competitors to do even more dumb stuff that ultimately will be the thing that kills them. They just haven't done dumb enough.
Too many eyes are on it. Too many eyes on it. The last time Nick started digging into these type of dynamics was with a Smooth Love Potion back in the Pixie.
Axie Infinity. Yeah.
Well, we didn't. Yeah.
Well, I think I said this off camera, and you both were like, you should say this on the show, which is, in my opinion, finance should be relatively easy from a mathematical perspective, right? You're not doing extremely complex functions to understand a company's balance sheet. It's basic algorithm. So when I hear all of these terms and new ways of slicing and dicing how to explain something to the general public, as in what Michael Saylor, I perceive that's what he's doing, that's when I start to be concerned, because to me, once you fundamentally like strip away all of that and understand what's happening, I don't see how it ends, in confetti and a parade, more with tears and, massive selling pressure.
Well, so then there's this other, the other asset that people all point to as like, this marks the end of, or this is the thing that's going to blow up, is Tether, which, the Tether is holding, basically doing fractional reserve banking, right? They have, a bunch of cash on their balance sheet and cash-like entities, and then they have the top part of their balance sheet generating a lot more yield with Bitcoin and gold and other things that, effectively induce higher returns. But it means that unlike, for instance, Circle or Genius Act certified stablecoins, they aren't fully reserved in a way that they could instantly liquidate everything.
Well, they are fully backed and over collateralized in terms of like the dollar amount of capital. If you're talking about just like the just like the U.S. Treasuries or non-U.S. Treasuries, like obviously they have some alternative exposure. But
well, right, but I'm saying that's what fractional reserve banking is. It's not like you run, basically a bank takes deposits and then invests it in liabilities, and kind of those liabilities have a different liquidity profile from the deposits, but you're counting on not everybody exiting at once. Well, that's what's going on with Tether. They, in contrast to a U.S., a Genius Act certified or a money market mutual fund, where it's effectively designed where if everything needed to flow out at once, conceptually they're operating on a set of instruments that people have all agreed this is cash-like enough that they could meet those obligations, leaving aside the fact that actually they can't, even money market mutual funds, but they're just operating with a riskier balance sheet. So then people say, well, maybe they're trying to get certified into the Genius Act, and so they have to clean up some of that risk exposure, and that would also be a mechanism by which you're putting sell pressure on the gold and Bitcoin as they try to clean themselves up.
Well, for Tether, this is not a net new thing. Like, this is how they've ran their reserves for quite some time. And in terms of like being Genius compliant, like USDT, that's just not on their roadmap, because they're going to do like entirely new stablecoin that's going to be fully Genius compliant, and that's how they're going to enter like the U.S. markets. But I think for me, like a lot of this new like Tether FUD that's been going around is like I don't get it as much, because this is, they've been doing this for years, so this isn't anything new. And I think there's just a lot of like negative sentiment, especially on the crypto markets right now. And so especially if you're concerned about Bitcoin and quantum, and then you look at Tether, and people are just going to find things to point at, in my opinion.
All right, I feel like this was a good summary of all of the crypto FUD floating around, and how Raye's dodging taxes using ZCash. Look forward to seeing everyone next week. Raye, thank you for joining us and for breaking down.
Thanks.
Yeah, thanks guys. This was great.
All right.
ARK Investment Management LLC is an SEC registered investment advisor. ARK, Wolf Financial, and Public are separate, unaffiliated entities and do not have a relationship with respect to any company marketing or selling the products or services of the others. ARK, Wolf Financial, and Public make no representation or warranties regarding and expressly disclaim any responsibility or liability for any acts, omissions, losses, or damages of the other entities or their affiliates, officers, employees, or agents. No company shall be liable for any indirect, incidental, consequential, or special damages arising out of or in connection with this podcast or its contents. The information provided in this show is for informational purposes only and should not be used as the basis for any investment decision and is subject to change without notice. It does not constitute either explicitly or implicitly any provision of services or products by ARC, and investors should determine for themselves whether a particular investment management service is suitable for their investment needs. All statements made regarding companies or securities are strictly beliefs and points of view held by ARC and/or show guests and are not endorsements by ARC of any company or security or recommendations by ARC to buy, sell, or hold any security. Historical results are not indications of future results. Certain of the statements contained in this show may be statements of future expectations and other forward-looking statements that are based on ARC's current views and assumptions and involve known and unknown risks and uncertainties that could cause actual results, performance, or events to differ materially from those expressed or implied in such statement. ARC assumes no obligation to update any forward-looking information. ARC and its clients, as well as its related persons, may, but do not necessarily, have financial interests in securities or issuers that are discussed. Certain information was obtained from sources that ARC believes to be reliable. However, ARC does not guarantee the accuracy or completeness of any information obtained from any third party.